Hello, friends. Welcome back again. In this episode of fundamental analysis, we will do how to screen stocks which are good in fundamentally with good fundamental parameters and how to analyze these stocks. So, this is the screener.in. You can go to screener.in and log in. I have already logged in. Now, the most important feature you can search a company here, say Astral, and you can see Astral here. Okay, this export to Excel, you get the Excel sheet downloaded. Okay, but the most important feature is this screens. This screen you can see and explore yourself. I will not explain this again because I've already covered it in the previous parts. But the important thing is that you can go to the screens, and I have already some screens I have made myself. There are some ready-made screens also available, as you can see. Okay, uh, let's create a new screen. So how do you make it? Say I want to have a good small cap company with a high growth potential. So I will write market capitalization should be less than, say, 20,000 crore. You not required to write crore. It is understood. Then market capitalization, let's say greater than say 1,000 crore. You want to be safe. Okay, don't go for penny stocks. And say price to earning ratio should be less than 20, and don't go for too strict parameters, because when you write 15 or 10, then the stocks you will get are the stocks which are actually not well, because they have been beaten down or they have not been rising because of the bad business. So sometimes you have to relax the conditions. So now let's say ROCE you want to keep for 3 years average or 7 years, or just one ROCE for the current, let's say greater than 15%. And return on equity, let's again say then 15%. And I want to keep PEG ratio also in check, less than 1. And debt to equity ratio, I want to keep it less than 1. So these are broad parameters. You can always play around with all the ratios which we have seen, but these are all broad parameters I am covering. Let's add more. Uh, mm, Price to sales less than 1.5. Sorry, 0.5. Okay. You can now run this query, and you got 19 results. So it is straight away a good result, 19 companies. And once you see this 19 companies, you can download it, go to each company one by one and download any company. Okay, out of this, you can go to say CPCL, then this export to Excel you can download. So I have downloaded few companies. I just want to highlight how to do the analysis. So let's go to uh, Praj Industries. So when you download, this is the sheet you get. This is a raw sheet. You can always customize this sheet. You can see this. Please do not make any changes to this sheet. This is the last sheet of data sheet. This is not supposed to be touched. This is having all the datas. However, if you see, this is P&L statement year on year. Okay, and if you see few ratios, they have given dividend payout and operating profit margin. Rest you have to calculate and make your own formulas. Again, this is quarterly P&L statement. Then there is a balance sheet. This is ROE and ROCE is given every year. Then there is a cash flow statement, and this is how you can customize. The freedom is given by the company to customize yourself and do anything, but it takes a lot of time to feed in all the formulas and all and make a useful sheet out of this, because you should know in a first glance about the parameters you want to see, and this raw sheet doesn't give you anything. So I have made one more sheet. This is the sheet I have made. These are some instructions on this sheet. Okay, there are various tabs in this sheet. Now first we will go to the income statement. So this is how I have made this sheet into very colorful theme, and this is now sales growth. This column, this row is added, and every year sales growth is counted between year on year. And once you see in the last, you can see 9-year CAGR, 7-year CAGR, and 5-year CAGR. You can find it here. Okay. Same way, wherever possible, the CAGR of 9 years, 7 years, and 5 years have been shown here. So some of the highlighted columns you can see EBITDA. So this is all the row of EBITDA. Then EV to EBITDA ratio, very important ratio, is again you can see here. Then all the margins. This is gross profit margin. Then you can see down below operating profit margin. This is the row, and this is the EBIT, and this is PAT, net profit. And NPM should be greater than 8%, as I said in the uh, part 5. So this you can see last 3 years, you can just see the data of last 3 years. And if you want to do more analysis, you can go for you can see the previous years also. But last 3 years I have highlighted because more or less the latest ones are the ones which are important. And this is sales per share. Whatever sales was in this is in crores. Okay, so this is per share calculation. So this is the market cap of the stock, and company name is written here, Praj Industries. Okay, so now let's see the other. Now next is the cash flow checks. So CFO, then free cash flow calculation is here, which is not part of the standard sheet. Free cash flow to firm and free cash flow to equity, and this should be greater than dividend. And this ratio of free cash flow to CFO, I told it should be greater than 0.1. That means at least it should generate 10%. Okay. Then free cash flow yield, again it should be in the range of 8 to 20. So all the parameters also have been mentioned here. Okay, how much it should be there. Now this is debt service coverage ratio. So total debt has come, and now this is service ratio. It should be greater than 1.25. So in this company is more than 1.25. Then there are some checks and balances, doubtful debt. Then dividend to net profit, how much dividend company is paying out of the net profit, 38% of net profit. Then retained earnings, again most important term as we saw earlier. So change in reserves, how change in reserves, liabilities, missing expenses. Then this comes the SSGR, self-sustainable growth rate. Again, this is not part of the standard sheet. This is 7 years, 5 years, and 3 years SSGR. This is yearly. So after every 3 years of data, you can generate this SSGR. So this is 0 here, this is 0 here, and based on this total 3 years of data, you can see SSGR here. So SSGR is a longer calculation, and that is why you can see only this last 7 years data, and the SSGR 3 years, 5 years, and 7 years returns. So this now, if you see this 30% SSGR, and what was the sales growth? Say 3 years, or maybe compare it with 5 years. It is a robust data. 5 years with 5 years of sales growth, 17% sales growth, whereas SSGR is 16.41. So it is more or less nearby. So this company is okay. We have no issues with this company. And the instruction also is written here. SSGR refer to the growth rate at which company can grow. This entire thing you can read and then analyze things. Okay. And also sales growth for ease of comparison. I have put it here also. 3, 5, and 7. So you can compare 3 years 38%, SSGR is 26, 5 years 24, something like that you have put here. Okay. And best and worst performance also written here. Likewise, there's a ratio analysis. Now PEG ratio, this is 1.91, is a high PEG ratio stock. Okay. This is EPS growth, 9 years, 7 years, then 5 years. All the parameters I have done average also. Average 5 years ROE, average 5 years ROCE, average 5 years ROA. Now why 5 years? Because if you see some of the newly IPO companies, they don't have data. They have data till only last 4 to 5 years. So it is very difficult to analyze all 10 years of data for that companies, unless the company is old and they listed way back before 10 years. Okay. So few companies only 4, 5, 6 years data is available, and that is why the error will come in this 9 years column or maybe 7 years column. So it is better to go for at least 5 years of average. So current ratio, quick ratio, interest coverage ratio, everything is written here 5 years average, and year wise also it is written as per the in front of it. And I have already mentioned that the ROE should be greater than 15%, ROC 15%, debt to equity less than 0.5% is better. Less than 1% is also good, but 0.5% is best. Again, quick ratio should be 1.25 times greater than that. Interest coverage, everything. Then there are some additional ratios also here written. Wherever there is a error coming, that means the data is not available in the master sheet given by the screener.in. So you can see now this is stock return. 9 years 33%, 5 years 39%, and 3 years 61%. And what is the dividend CAGR? Dividend has also grown as 16%, 23%, and 40%. So by this kind of parameters, you can take a judgment on the company that how much dividend it is paying. And after paying dividend, generally what happens, the companies like Coal India and all, they pay dividend, but stock price remains there only, because whatever earning they are having, they give it all in dividends. But we don't want stocks like that, because they will not give you some multi-bagger or maybe 15% return. So we should have some dividend, may not be have zero, maybe have zero dividend also, but this company is also giving dividend, and that is also growing, and likewise the stock price also growing together. So you're getting two benefits. First is the dividend payout regularly, as well as the stock price itself is also growing. Okay, so this kind of judgment you can take from this. Now this is a balance sheet analysis. So these are all parameters of balance sheet. Trade receivable, lower is better. Inventory levels, inventory turnover ratio, higher is better. Inventory turnover days, lower is better. So all these things are given, and last 3 years are highlighted. Okay. And average 10 years is written in the last column. And this is very important column, working capital days. So this 67, it shows how much days company take to convert working capital into sales. This is also very good metrics to see how well a company or compare with the other companies of the same industry. So these are all ratios. Guys, I have been making this sheet since 2020, and I've kept on innovating things. And with my one of my good friend, we have developed this formulas and sheets and everything. It took me a long time to make this sheet. So these are all gross block, that is gross assets, then capital works in progress, capex, which I mentioned in the earlier video, then CWIP to gross block percentage, net fixed asset, net fixed asset turnover. This is the formula. This is used for the formula of SSGR. Then some of the quality checks analysis. These are here. Piotrowski F score should be greater than 6 or maybe 7, you can consider. So based on this parameter, you get 1 or 0, 1 or 0, and the total is given as 4. Again, Altman Z score should be greater than 3. It is 5.0 in this. And there are modified Montier C score. It should be less than 3 or 4. So as you can see, all parameter 1010 awarded, and here it is 5. Okay. So this is how you can, this single sheet of income statement gives you all the data. And if you go right side further, the summary of all the scores are given. So margin of safety, free cash flow, SSGR, and earning yield. This has 0 because SSGR was just lower than the sales. Altman Z score 5, it is okay, greater than 3 hona chahiye. Then C score, it should be less than 4, but it is 5, so not a very good company. You can, then out of total 60, this is greatness score, which I mentioned. Clean score, how much company manipulating the book of account. Quality score out of 24, and this Piotrowski score out of 9. So this total comes out to 60, 17, 10, 24, and 9. So out of 60, this company has scored 28. So it is okay company. Likewise, you can analyze in a single sheet. You can get many data. Then we come to the cash flow. Again, cash flow, I have added few important rows like CFO to PAT. It should be more than 80%. Okay. Then 3 year CAGR, it is negative. So all these things are extra added. Operating cash flow per share, cash reserves at least 25%. So then we come to the balance sheet. I have again added some highlighted or some added some columns. ROE, ROC, ROA. So you can see average 5 years also. And these are the reserve should increase, borrowing should decrease, and working capital also highlighted here. And this is quarterly. So you can see, you can compare quarter to quarter, September to September, and likewise. So there should be improvement in quarterly result compared to the previous year. Okay. So this is all 3 sheets of which is standard given. Now, if somebody wants to do quick analysis and not want to see all the parameters, I have made a summary sheet. This is very important. Now, if you enter a book value of the stock here, say for example, book value of Praj, say it is around 500 stock price. Say if I add 400, you can see in the here also Praj Industries, the book value is 70 rupees. Okay, so let's add 70. Once you put 70 here, Graham number will appear here. So it should be 160 rupees stock price, ideal, but it is more than around 500. Okay, so now the ratio analysis. This is a shortcut of all the ratios. EPS, PE ratio, PEG ratio, EV EBITDA, price to sales, asset inventory turnover ratios, return ratios, ROE, ROC, ROA, earning yield, then leverage ratios, debt to equity, interest coverage, DSCR, margin ratios, gross profit, operating profit, and net profit margin, then growth ratios of 5 year CAGR, SSGR, sales, EBITDA, PAT, stock price. So if you use this, it should be sequentially. The stock price CAGR should be higher than PAT CAGR. This should be higher than EBITDA CAGR. I have written here note mein. Then this EBITDA CAGR should be higher than sales CAGR, and sales CAGR should be higher than SSGR. Sorry, SSGR should be higher than sales. Okay. So likewise, you can compare quick ratio, current ratio, and Graham number. This is all ratio analysis. When you come down, quality scores, again the same scores, total up here 60. Now it is 28 out of 60. Margin of safety, free cash flow, no. SSGR, no. Earning yield, no. So earning yield, it is not more than 6, so no. SSGR is higher than sales growth, no. And free cash flow, that is 0.1 ratio, it is again no. So likewise, you can directly see the shortcut. Then there is a coffee can investing, which I mentioned in part 6 for stocks except BFSI. If the number of years having sales growth greater than 10% every 10 years, or in this sheet we can have data of only 9 years, so you get only 4 years, and ROC greater than 50% for only 5 years. For BFSI stock, the data will be here. For Praj Industries, this is not relevant. Okay. Now next come to the income statement checks. So net profit margin greater than 8%. Yes, it is there. Dividend to net profit 10 years, 45%. Value created per rupee invested of retained earnings, 22 rupees. So every 1 rupee of retained earnings, the value created is 22 rupees. It is a very good value. Now cash flow checks, number of years having positive free cash flow out of 9, 6 years. Total free cash flow generated in 9 years in crores, 534 crores. Free cash flow yield, it is not good. CFO to PAT greater than 80%. Yes, it is 100%. Now last 5 years check, CFO positive, yes. CFI negative, yes. This should be also negative, but they must have done some transaction or sold some investment. Then it comes no here. Okay. So this is all for normal stock. Now there's this comes the balance sheet check. Reserves increasing, yes. Borrowings decreasing, no. Working capital increasing, yes. Again, all these parameters, no or yes will be here. Debt to to convert the capital into sales, it is directly coming as here. Okay. So this way you can do the analysis. Now for banking and financial stocks, the data will come here. Okay. So this is all the summary part of it. Okay. Now let's come to the graphically. If you want to see graphically how the various ratios, sales and profit growth, cash flow growth, how this grows. This is ratio, percentage ratio chart, then balance sheet, turnover chart, various ratios. This is for BFSI stocks, loan growth, deposit growth, and P&L chart. So this is all charts. Chartically also you can see how much it is performing. Now let's come to the DCF analysis. I have made one entire sheet for the DCF analysis. Now for DCF analysis, we need to know what is the beta of the stock. So let's go to the money control and we'll search for Praj Industries. Okay. Now Praj Industries beta is 1.16. Okay, we'll go to the back to the sheet. Okay, so beta here is 1.16. Now let's see, this is a two-stage model of dividend distribution. So let's say I will say that company is having high growth for next 10 years. You can fill 5, 10, 15, 20 years. Then after that company's growth rate will moderate. Okay, so you can fill predicted growth rate during high growth period. For example, as of now it is 32%. Okay, EPS growth 5 years. So you say I assume it will continue the same way. So I will write 33%. Say. So now the stock's intrinsic value will come here as 1688, whereas current market price of the stock is 814, and hence the stock is undervalued as per the dividend distribution model. If this stock doesn't give dividend, so यहाँ पे it will come as no dividend. Okay, so you can come down for the next model, that is two-stage free cash flow to equity model. Okay, remember that I have already mentioned in part 5. So say high growth period is again, let's say 10 years, and I assume that the growth rate again 33% same. So in this model, if you see free cash flow model, because since the company was not keeping the free cash flow or not generating too much of free cash flow, because Praj industry is a heavy engineering industries. These kind of companies are having higher debt levels. So they instead of that they keep using this free cash flow whatever they are having, and that is why the free cash flow is to equity is not available. So in this model, the intrinsic value is showing us 179, whereas current market price is 814, and it is showing as overvalue. So now it is up to us which model we should adopt and which is more useful for which kind of industries. If the company is giving dividend, then go for this. If the company is not giving dividends, then go for this. And you can strike a balance between, you can take an average also, like normal term 1600 plus 100 divided by 2. So it comes out around 800. So it is all in this way also it is reasonably valued. So this is a DCF analysis. Okay, so that's it guys. This is how the entire analysis you can do. Firstly, screen the stocks using the screens as I mentioned, and after the screening is done, okay, fundamental analysis, I'll just show you 72 stocks. I have done some detailed fundamental market calibration, sales growth, everything 10 years, 15 years, I have put it. So I got result of, I've kept it very lenient. Okay, PG ratio less than 2. Let 1.5 PG ratio stock also come. Maybe other parameters may be good. So I've kept it little lenient. Free cash flow less greater than 0. There has to be some free cash flow. Even it is 1 crore, it is okay. So that way you can keep it lenient, and then if the list is too high, then you can keep going stricter and stricter and reduce the number of stocks. And then go to each stock one by one, download their Excel sheets and do the analysis. You'll get the link or payment link for the getting this sheet in the description below. And whosoever is interested and want to do serious fundamental analysis with the help of this sheet, it will shorten the fundamental analysis time frame. I used to take around 7 to 10 days for one stock. With this sheet, only couple of days or maybe one day, single day, I can sit and throughout the day I can just finish off the stock. The only thing you need to check extra, say for example, which is we cannot be in the sheet, is uh, criminal charges against Praj Industries promoters. Likewise, you can search for the management quality. So there is some litigation is going, Praj Industries versus Surendra Ashok Patwardhan. Okay, Praj Industries versus Joint Commissioner of Income Tax. There must be some other thing. So this way you can search for the how litigations and other court cases are going on against the promoters of the company. This cannot be in the sheet because this is a manual search. Other than that, all the checks and balances are built into the sheet, and you can utilize this sheet effectively. So those who are interested, you can go check the description below, and you will get the link and on how to obtain this. And the sheet will be emailed to you once you fill up the form given below, and along with the exact video how to upload and use this sheet. Okay, so that's it guys for today. I hope you find the fundamental analysis useful, and you have learned something out of the whatever contents I have put in the channel and whatever the videos I have made. And you can spread this around your known friends and families so that they can also get benefited from the same. Okay, see you guys and wish you best of luck. Thanks.